The ascending channel structure. Jasmycoin has been trading inside an ascending channel for the past week, a technical pattern that signals buyers are progressively willing to pay higher prices despite temporary pullbacks. Understanding this structure is critical because it defines your risk parameters. The lower boundary of this channel sits around 0.018, $0.00120, a zone that's functioned as reliable demand over multiple tests. Each time Jasmy touched this level, buyers stepped in with enough conviction to push price back toward the channel midpoint. This creates the ascending pattern, higher lows indicating accumulation rather than distribution. Currently, Jasmy trades at 0.00126, which positions it slightly above that lower support, but still battling resistance from multiple exponential moving averages. This is the compression zone where direction gets determined. Price is squeezed between rising support from the channel floor and descending resistance from the EMA cluster. The technical significance: ascending channels typically continue until they break. Statistics show these patterns maintain their trajectory roughly 60–70% of the time until a decisive breakout, upward continuation, or breakdown, pattern failure, occurs. This means respecting the structure matters more than predicting which direction wins. For Jasmy holders, the lower channel boundary, around 0.0118, represents your line in the sand. As long as price holds above this level, the bullish structure remains valid and another test of resistance becomes likely. If price breaks below 0.018 with volume, the ascending channel fails and the next support zone drops to 0.0 reverse, roughly 7% lower. The upper boundary currently sits near 0.014, 0.145, representing the bullish target if momentum breaks through resistance. That's where profit-taking typically accelerates as traders exit into strength. Understanding these boundaries lets you position stops below support and targets near resistance, the framework that separates trading from gambling. EMA convergence signals volatility. Here's where Jasmy's chart becomes particularly interesting. The 20, 50, 100, and 200 exponential moving averages are converging into an extremely tight cluster. This compression pattern is relatively rare and carries specific implications for what happens next. Currently, the 20 EMA sits at 0.012284, the 50 EMA at 0.01286, the 100 EMA at 0.00299, and the 200 EMA at 0.01345. That's a vertical spread of just 0.061 cents across four major timeframe indicators. This convergence shows price has been consolidating in a narrow range, building potential energy for the next directional move. Technical theory explains why this matters. Exponential moving averages represent weighted average prices over different timeframes. When they cluster tightly, it means short-term, medium-term, and long-term traders are all positioned near the same price levels. This creates a coiled spring effect where a breakout in either direction tends to accelerate rapidly as stops trigger and momentum traders pile in. Historical precedent on Jasmy and similar altcoins shows that EMA compressions like this typically resolve within 24 to 72 hours. The resulting move often ranges from 10 to 15% as the release of tension forces rapid repricing. This is why the current structure feels like watching a countdown. Something significant is about to happen. You just don't know which direction yet. The immediate resistance sits at that 50 EMA level around 0.01286. If bulls push through this with volume, the next target becomes the 100 EMA at 0.01299, then the critical 200 EMA at $0.1345. Breaking above the 200 EMA would complete the bullish breakout pattern, likely accelerating toward the channel upper boundary near $0.014. Conversely, rejection at the 50 EMA sends price back toward the 20 EMA support around $0.01284, then potentially down to the channel floor at $0.0118. The key observation: whichever direction wins the initial battle typically gains 7 to 12% before the next consolidation. This is the high probability move traders position for. If this technical breakdown is revealing chart patterns and price levels you haven't seen explained clearly elsewhere, you need to smash that like button immediately and subscribe to TJ Crypto World. I deliver these technical analysis deep dives daily because the space is flooded with vague predictions that don't give you actionable levels to trade. Your engagement tells me you're ready for analysis that identifies exact decision points rather than just drawing lines. Now let's examine what the RSI divergence is signaling about momentum exhaustion or continuation. RSI divergence and momentum signals. The RSI divergence indicator currently reads 3.97, placing it in mildly bearish territory but approaching the zone where reversals typically form. Understanding what this number actually means helps predict momentum shifts before they become obvious. RSI below zero indicates recent selling pressure has been stronger than buying pressure. However, the 3.97 reading isn't extreme. It's not the capitulation levels you see at 10 or below where panic selling dominates. Instead, this suggests controlled selling pressure that's approaching exhaustion. The technical signal traders watch. When RSI approaches oversold territory while price holds above key support, it creates bullish divergence, a setup where momentum indicators suggest the selling is done even though price hasn't rocketed yet. If Jasmy's RSI turns positive while price holds above $0.0120, it confirms buyers are regaining control. Volume confirmation matters here. The EMA compression and RSI setup only translate into actual moves when accompanied by increasing volume. If Jasmy breaks above 0.1286 hours on volume, that's 150-200% of recent average, it validates the breakout. Without volume, the move likely fails as traders fade the rally. For the bearish scenario, RSI diving deeper into negative territory while price approaches 0.1118 would signal momentum favors breakdown. In that case, waiting for the channel to break and shorting the retest of broken support becomes the higher probability trade. The current reading suggests we're in the decision zone where momentum could flip either direction. This is why the next 24 hours matter. RSI and price action together will confirm whether bulls or bears control the next leg. Let's consolidate everything into actionable levels you can actually use for position management. These numbers represent decision points where the probabilities shift significantly. Immediate support. 0 to or on all 6 0 to $200. This is your first line of defense if bulls lose control. Holding above this range keeps the ascending channel valid. Breaking below triggers alerts that something's changing. Critical support, 0.018. This is the lower channel boundary and the level that invalidates the bullish structure. If Jasmy closes a 4-hour candle below this with volume, the pattern has failed and 0.0011 becomes the next target. For long positions, stops should sit slightly below this level. Immediate resistance, 0.1286. 50. EMA cluster. This is where bulls need to prove themselves right now. Breaking above this level with volume shifts probabilities toward the bullish scenario targeting 0.013, 0.0135. Major breakout level, 0.01345, 200 EMA. Clearing this resistance completes the bullish pattern and likely accelerates toward the channel upper boundary. This represents roughly 7% upside from current levels and marks the point where momentum traders pile in. Bullish target 0 to 0.014, 0 to $0.0145, channel upper boundary. This is where profit taking accelerates and consolidation typically begins. Traders taking profits here are selling into the strength that breakout buyers provide. For position sizing, the risk reward becomes clear. If you enter around 0.0126 with stops at 0.00117, risking 0.0009, targeting $0.0014 provides $0.14 potential gain. That's roughly 1.5.1 reward to risk ratio on the conservative target, improving to 2.1 if the full channel plays out. Before we conclude this technical analysis, make sure you're subscribed with notifications activated. I'm publishing daily chart breakdowns on altcoins setting up for high probability moves just like this Jasmy pattern. Tomorrow I'll analyze 3 other ascending channel setups reaching decision points simultaneously. Don't miss positioning insights before these patterns resolve. Subscribe now so you're prepared when the moves happen. I genuinely appreciate each of you for engaging with this detailed technical breakdown. Your questions about specific levels and pattern interpretations push me to deliver analysis that actually helps your trading decisions. Remember, Jasmycoin is at a critical juncture where the ascending channel structure, EMA compression, and RSI positioning all suggest a significant move is imminent. The next 24 hours so could likely determine whether Jasmy breaks towards 0.14, 12% upside, or drops to 0.0 Our love blow, 7% downside. Position management around the key levels we discuss protects capital while capturing opportunity. Watch that $0.122186 resistance level closely. It's the make or break point for the bullish scenario. Break above with volume, and the path to $0.0014 opens. Rejection there, and $0.018 support gets tested again. Either way, the chart is telling you exactly what to watch. This is TJ from TJ Crypto World, reminding you that successful trading comes from respecting price action and managing risk around identified levels. Keep studying chart patterns, keep identifying high probability setups, and I'll see you in tomorrow's analysis where we'll review how this Jasmy pattern resolved and what similar setups are forming across the altcoin market.